What's up, everybody? Happy Monday. This is the weekly recap of past week's trades. If I sound funny, I'm a little under the weather. But we're going to keep it moving and talk about the 3 trades that I did last week. I only had 3 trades last week. All were losses. And before I get into that, let me explain to you how I see losses in trading. First of all, if you're not willing to lose on a trade, then trading is not for you. This is a high risk, high reward type of business. So losses is part of that business. I look at losses, to me, losses is just a fees. It's a fee that you're willing to pay for the winners that will soon come around. So if you manage your losses and don't micromanage your winners, I'm going to say that again. If you manage your losses and don't micromanage your winners, you can be successful at this game. I had 3 trades this past week. Twitter was the first one. Now, all of these trades, I got in on Twitter. I want to say Twitter was, the Twitter trade was on Monday, the 22nd. So I got a buy signal here. You see, again, the blue bars indicate possibility of an upside move. So I got into, let's see, the strike. I was in the 66 call, $95, $98.60 with the commission cost. So that's what I had at risk. I was planning for Twitter to hit $66 before Friday. And you see, if you see this line here, this is the strike, 66 strike. Remember, strike prices are where I'm betting Twitter will go by expiration, which is every Friday. I only trade weekly options, meaning I only have a week for the move to occur. So if I get into a position today, on Monday, this is a short trading week because of the holiday on Friday. If I get into a position today, I will only have 3 days. Expiration would be Thursday. So again, on Monday, I bought the 66 strike when Twitter was at 65.21, which would have been a small move to make me profitable. And as you see here, Twitter trended down. Last week was a funny week because we had some stuff going on with one hedge fund, and a bunch of brokerage firms did what they call block trades, and it took a lot of stocks down. But I really don't look for excuses. I just, roll with the punches. But again, this was a loser. Let's go to the next one. Beyond Meat is the next trade. I also had a buy signal on Beyond Meat. Beyond Meat, yeah, Tuesday on the 23rd. And remember, I talked to you guys about lineups. Like if I get a weekly signal, I usually wait for a lineup on another time interval. This is a weekly, 1 day, and a 2-day chart. I got a signal on the 2-day, but I didn't wait for a lineup, and I got into the position. And as a result, it was a loser. Even if I would have waited till Thursday, I may have been able to double my money here because you see it had a slight up move. This is the 2-day chart. So on Tuesday, on the 2-day chart, it gave me a buy signal. This is Tuesday on the daily chart. It didn't give a buy signal, and I don't even have a blue bar on the weekly. So let's see how I waited. First, let's see what I bought. I bought the 140 strike at $125. Okay, $125 on this day here when it was at 137. So I was betting for a $3 move, and it didn't happen. So the option expired worthless, so I lost a whole $125. Let's see, how I waited to Thursday. It was at 129.73. Let's look at an option. Let's see if it's at 129.73. Let's see what the 130 would have cost. Oh, that's 180. That's out of my price range. The 131. $104. Look at this box here. You see that green? $104 on Thursday had I waited. But the next day it only hit a high of 165 before crashing down. So this position was just a total loser. Nobody was buying. So lost on that position. So let's go back. Tesla. I had a buy signal on Tesla, which again, that lineup. Bought it on Thursday at 325, which would have been an expiration trade. And I did it based on the 2-day only. And as you can see here, the daily didn't line up with it. And as a result, there was a loser. I was hoping for a move to the upside early on in an early Friday morning session to possibly double up my money. But it didn't happen. I was in the 680 call. 680 call. I was looking for a $40 move, with is nothing for Tesla. As you see here, it was down $20 on Friday. So that trade was also a loser. So net, I'm down $430 for those 3 trades. Again, losses to me are simply the fee that you pay. It's a waiting fee. That's how I look at it. It's a waiting fee. And you want to manage your losses when they come. And what I mean by managing, I mean by already having what you're willing to lose in mind. You never put all your eggs in one basket. As you can see here, the cash that I have in my account, I never risk more than 5% on a multiple of trades. I'm not just talking about, and I would never risk that whole 5% on one trade. That 5% that I'm willing to risk, which is $1,300 per week, I'm willing to risk $1,300 per week across multiple trades. So I'm spreading it around. And by doing that, you are increasing your sample size of trades. And that's what trading is about. You want to keep your sample size of trades high. You want to take each and every signal, and you don't want to micromanage your winners. And what I mean by micromanaging your winners, getting out of your winners too soon. It shows a lack of patience, and it shows emotional decision making based on looking at your P&L. So the way that I trade, I already have in mind what I'm willing to lose. And that's 5%. I'm willing to lose 5% of my total account value in a multiple of trades. Not just one trade, a multiple of trades. In this instance, I'm 0 for 3 for last week. So all 3 trades were losers. Now suppose Tesla was a winner. And Tesla is one of these stocks that I call my runners. I call them my runners because when it moves, that $200 risk that I had could have turned into $1,000 or $1,500. I've made a lot of money in Tesla, especially last year, on moves typically that happen on a Thursday going into a Friday. So I would, anytime I get a signal, well, in this instance, I should have waited for the daily to line up with the 2-day. But again, you're going to see in trading, you know, as I do these videos, you're going to see me make mistakes. That's just a part of being human. But discipline and patience is the key. So there are going to be times where I do trades in Tesla, Amazon. These are what I call my runners. These are the ones that you'll get those $1,000, $2,000 runs on a 1 day move. Google, you know what I mean? Because their options are expensive, but when you catch it right and you catch it at whatever your right price is, and in my case, the right price for me in these 3 different stocks is $200. I'm willing to risk $200 on a Google, Amazon, or Tesla trade. In this instance, I was in 2 contracts and I risked $200. You can see here, two on the 680 here. It had to jump here. As you see, it sold off. So that trade was a loser. So I got a blue bar here, but no blue bar here. The blue bar didn't come until now. So that's what trading is about. You have to be willing to risk in order to achieve a return or a reward. Let's look at trades that I have, what I'm looking at this week. It's a short trading week. Like I said, you got some noise going on in the news related to a particular hedge fund with ties to different brokers. But I did get some signals. Dots and checks indicate buy or sell signals. Red checks or red dots indicate sell signals. Green dots and green checks indicate buy signals. But again, I got one in AMD. That's a blue bar. I'm waiting on a line up here. I didn't get it with the daily. Same thing for Boeing. Which Boeing looks ready, but we'll see. Here again, Dash again. Look at DoorDash. Look at all these blue bars I got. But the move didn't happen. You know what I mean? DoorDash is set to pop one day. Hopefully I'll catch it to get some of my money back from it. Disney. No lineup. I'm willing to wait on these lineups. I have to be willing to wait on these lineups because it is proven to be high probability setups. Google is giving me a lineup, but at the same time, let me show you Google's options prices are too expensive. Let me go there. All right. Go to the next one. See, 3 days remaining today. If I get into a position on Google, I got 3 days remaining. Google on Friday closed at 2,024. I got a buy signal. Look, these are my prices. This is around the areas where I'm willing to risk. So we got to go to the 2107, which ain't bad. It's not bad. So I'll be looking at that today. Intel. I got a sell signal on Intel. Also want to wait on the lineup for that. And let's see. Sell signal. QQQ. This is a tech ETF. And right now, based on where the futures is at, futures is the overnight markets. They are down. Let's look at the pre-market and see what the QQQ is at. Okay, now. So we'll be seeing what I get today. I'll make a video. Also, I'm looking into streaming live my trades. So look out for that. I'm working on it. I downloaded the software, and it's just a matter of me playing around with it and setting it up. So stay tuned for that. It may be today, it may be sometime this week, or it may be next week. But I will be doing a video if I do have any trades. So again, you guys, thanks for listening. I enjoy the comments, and any questions that you have, I will answer. These videos are for, educational purposes. to show you what trading is all about, the rewards and risk in it. I am not advising. I am not, suggesting you get into any of this stocks, or I'm just here to, inform you guys. All right. So, but thanks for listening. Have a great one.